the Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com.
Governments actually used to issue annuities because they knew they had no intention of ever paying anything back.
Right.
So you give me $100,000, I'll pay you interest on that for the rest of your life until you die. When you die, it's dead.
Now that's called a lottery ticket.
Yeah. So, how we ended up in this situation, well, we're just going to borrow right now and pay it off, but we never pay it off anyhow. They're really annuities that just going on forever and ever and ever.
Right.
Just call it an annuity and stop calling them bonds, because that's what they're certainly not bonds.
Right, because a bond is an agreement between the borrower and the lender to pay back money over a certain period of time at a certain interest rate. And really, they have no intention of doing it. They're just going to roll over the debt and keep paying interest. Yeah,
and a 30-year bond the money that they pay you back dollar for dollar is pointless because, in 1980, a Porsche was about $50,000.
Mm-hmm. Yeah.
That same car today is like almost $150.
Exactly.
So, are you getting 3 times your money back? I don't think so.
Yeah.
So you always, anybody that invests in long-term government debt, you always lose to inflation. The interest rate is always, they claim it keeps pace with inflation, but it does not, because largely even the inflation numbers they exclude for their own benefit the cost of government.
Yeah, and then so now we're looking also in the U.S., a lot of these municipalities and counties and other governmental subdivisions, as they call them, like Detroit, is going to default at some point. They're going to file for bankruptcy. They owe $14 billion. There's absolutely no means for them to pay it back. They're going to have to file for bankruptcy, right? What's going to happen? Is this going to be a wave?
Yeah, we had waves of municipal defaults in Detroit, by the way, defaulted in 1933 also. Mm-hmm. And we had major defaults back in the 1840s. People that basically run government are not brain surgeons, and they seem to be more closer to con men than anything else. Uh-huh. They promise everything under the world to just vote them in. They leave office and they just leave it to the next guy who doesn't have a clue as what's going on anyhow. So government, the only way to stop this historical debacle is to prevent government from borrowing, period.
Right.
You either live within your means or you don't.
And individuals, too. You shouldn't be able to borrow to buy a flat-screen TV. If you remember American Express or Diners Club, when they started, they gave you an advance, and they expected it to be paid back within 30 days. And Right. Their primary source of fees were merchant fees for allowing the merchant to accept their card. And now it's like, finance your grocery bill, finance your gasoline, finance all your current expenses, just keep charging up more on the credit card.
Well, that's because that's where the banks are ripping everybody off. Mm-hmm. And this is a classic example. Volcker, in order to raise the interest rates as he did in 1980, the so-called fight inflation, he raised the discount rate to 17%. In order to do that, they had to vacate the usury laws.
Right. I remember it well.
So a bank could never charge you more than 6%. So then by doing that, the credit card rates could go up into the 20s. And you'll notice they haven't really come down.
Never have.
So the banks are more eager to lend on the credit card because the amount of money that they make there is astronomical.
Yeah.
And now look at, if you go to deposit money in the bank, you're lucky if you get 0.5% for 3 years.
Mm-hmm.
Go ask for a car loan for 3 years. They want basically 4%.
Right.
I mean, you can fly a 747 between the bid and the ask with these guys.
So like back in the good old days, and I'm sure you remember them well, like the purpose of the banking industry was to allocate capital to up-and-coming businesses or businesses that were looking to grow. What is the purpose of the banking sector now? Because it's certainly not financing capital expenditures of business.
No, and then it's basically just ripping off everybody, including the government. That's why the government bails out the banks, because they say, gee, if we're not too big to fail, who's going to sell your debt? So then the government realizes, oh, okay, fine. Here's how much you want, $700 billion. It's the only reason. That's why they're called the untouchables.
Mm-hmm.
They can do whatever they want, but they will never be prosecuted for anything, because if they're prosecuted, then the government's afraid that they're out of business.
Yeah, they're
Who's
too
going to
big.
sell the debt?
They're too big to jail.
It's just crazy, the whole thing, and it's all based upon debt.
Yeah.
You can't survive without us.
So
they become the crack dealers. That's it.
So we go back to Ben Franklin, who said, "Never a borrower or a lender be." And is that advice as relevant today as it was 250 years ago in Poor Richard's Almanac?
I think that, you can certainly borrow for short-term purposes. Mm-hmm. When, the 30-year mortgage, Roosevelt instigated, and that was because real estate had collapsed so much during the Great Depression. Farmland went from about $2 down to 10 to 20 cents an acre.
Right.
And so he extended the time to 30 years, figuring, okay, fine, I'll give you 30 years to pay it off, please buy. So that's where the 30-year mortgage stuff came from. Most other countries are still in 5 to 7 years.
And that inflated the price of real estate effectively,
it did.
Which is what they wanted.
Essentially, you're bringing 30 years worth of income forward in order to buy now.
And same thing with you're buying a college education. So it used to be you had to pay it out of current earnings. And then they created the student loan program. So now you could finance it over 10 or 20 years at subsidized rates and the same result, right?
Yeah, it sends the price of education higher.
And cars and anything that gets financed, basically.
Because you've got more money to bid.
Mm-hmm.
And so you're increasing the bid, you're leveraging it. We just have to understand that's what it does. And I'm not saying you go to zero leverage, but I think things were much better when we did have usury laws.
Yeah. Well, let me ask you a question. This applies if you're average Joe six-pack and you're expecting, based on what you're saying, debt repudiation, does it make sense if you can service your debt to buy the house now, to buy the car now, to do that stuff, assuming that you have enough current income and you've got a cushion in your bank, say, of 6 months payments to 6 months living expenses? Does it make sense to leverage up?
I would say this, that yes, that you lock in, it's a hedge. Because rates are going to go up.
Yeah.
So if you're going to look at doing anything like that, make it long-term. Say, thank you very much, I'll take the 30-year, and let them wear the risk on the interest rates. Because the interest rates are going to go up rather significantly. So
And it's a put on the dollar as well, right?
The dollar, that's where people have to understand. The dollar is likely to go up high enough to give everybody a nosebleed first.
Uh-huh.
And that's largely because you have capital coming this way from Europe, because it's just total chaos over there. Mm-hmm. And if the German elections if look bad, expect the dollar to go up even higher. That, you're probably looking at the euro going back down to 80 cents.
Wow.
So be prepared for that, because right now it's not that the U.S. is the greatest thing since sliced bread. It's just that we're not the worst in the lot right now.
Mm-hmm. Yeah, we're the
we
best
do
looking.
have the biggest economy.
Mm-hmm.
The economy here is not so bad. It's actually it has been doing well. We're going to have to see how Obama's tax increases hit, because that's going to definitely slow it down a lot. But Japan is really very serious, and Europe is a basket case. So, and Europe is coming in this year. I've been warning that it's going to come in negative. Now, even the Bank of England's having to come out and revise and said, we think we might be negative this year. I mean, it's terrible, absolutely terrible. So, and then you have France chasing everybody under the sun. They've gone after all the internet companies, PayPal, Google. They're invading every office over there, hunting down whatever they can for money. So they're chasing everybody out of the country.
Yep.
They're just leaving, and that's exactly what you have with the city of Detroit. I mean, you keep raising taxes because you need more money. You need more money. Well, people leave.
Yep. And California too, right?
California is another thing. I mean, you got more people trying to leave California, going to Florida, etc., than anywhere. New Jersey, same problem. New Jersey's got an exit tax now. If you want to sell your house and move to Florida, you got to pay an exit tax.
It's crazy.
I mean, it's nuts.
Yeah.
It's completely nuts. It's like, they just view everybody, all the citizens, as, a cash cow. That's it.
Yeah, you got it. I mean, that's it. You're a milk cow, and you better keep producing milk, because if you don't, you're going to pay the price.
Yeah, I mean, Obama's been all over the TV and basically saying that, this is going to be terrible for the economy because cutting our spending like that, and government employees will have to be laid off, and so their spending will not stimulate the economy. Okay, well then why are it raising payroll taxes and Obamacare not going to do the same thing? If the average person in the private sector has 10% less to spend, don't you think that's more important than the 700,000 people that you're worried about getting laid off?
Yeah, it's crazy.
I just don't get the logic with these people. It's reduce their spending. Oh my God, the world's going to end. Raise taxes and reduce the spending of the private sector. That's okay.
Yeah, exactly. Well, on that note, we got to get going, but I do think The Debt of Nations is the title for your next book.
I like that.
Kind of Adam Smith redux there. And you pick up right off of that quote from him, and then how long has it been since Adam Smith lived? Like 375 years or so, right? He was in the 1600s.
Well, he wrote The Wealth of Nations in 1776.
Okay, so it's been 240 something years, and everything that he said there about debt, that one small paragraph, has been proven all these years later, beyond a shadow of a doubt, as if it needed to be proven again. Because it's a law of nature that governments will default on their debt eventually.
They always do.
Yeah.
Always do.
So on that note, Martin, we find you at armstrongeconomics.com, and you're putting out articles on a fairly consistent basis these days.
Yeah, well, there's a lot going on.
That's for sure. and there's a lot more to come before this whole thing is over. So financialsurvivalnetwork.com, go there. You can hear this and a bunch of other interviews I've done with Martin. We'll talk to you in a few weeks, Martin, because this thing is picking up, and God only knows where it's headed.
Also, watch September in the German elections.
Yeah, absolutely. All right, you be well.
Thank you.
This show is sponsored by Sandstorm Gold, a gold streaming company. They provide capital to their mining partners that helps get mines built and into production. Sandstorm can then purchase a portion of the production at a low fixed price per ounce. This way, Sandstorm avoids the risks and headaches of exploring, permitting, building, and operating a mine, but still gets much of the benefit at a greatly reduced risk. There's no capital calls or obligation to invest additional sums. Sandstorm leaves the job of building and operating the gold mines to its partners while using its expertise to supply them with financial support. Nolan Watson and David Oram, Sandstorm's founders, were the first two employees of Silver Wheaton, which is the first metal streaming company and now the largest in the world. Since 2009, Sandstorm has built an 8 gold stream portfolio with 3 NSR gold royalties. Its market cap is over $1 billion, and it spun out a sister company called Sandstorm Metals and Energy. It's listed on the TSX Venture. Symbol is SND. Sandstorm will purchase approximately 30,000 ounces of gold in 2012, growing to over 60,000 ounces by 2015 at an average cost of just $400 per ounce, while the market price closes in on $2,000 per ounce. Sandstorm Gold trades on the New York Stock Exchange under the symbol SAND and on the Toronto Stock Exchange under the symbol SSL.